Welcome to our new IFRS Educational Fund series. It is an initiative of OG Inspiration Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards, IFRS, through a multiple choice question and answer approach. It is intended to make learning or intellectual assurance fun. In this session, we shall be considering 10 questions to which the answers have been provided on IAS 23. This is the standard on borrowing costs. Viewers or subscribers have 30 seconds to select or choose the answer to each question. Please enjoy it. Question number 1. The following are conditions to be met at first before commencement of capitalization by an entity. A, it incurs expenditures for the assets. B, it completes a part of the qualifying assets. C, it incurs borrowing costs. D, it undertakes activities that are necessary to prepare the asset for its intended use. E, it undertakes activities that are necessary to prepare the asset for its intended sale. Time counts. Ten seconds done. Twenty seconds done. Time up. The answer to question number 1 is B. It completes a part of the qualifying assets. All the other options together form the conditions that must be met at first before capitalization commences. B is the answer to question number 1. Question number 2. The condition for an asset to be considered qualified for the capitalization of borrowing costs is that A, the asset must be large. B, construction of the asset must be sophisticated. C, funding of the asset must be by borrowing. D, it takes a substantial period of time to get the asset ready for its intended sale. E, the asset must be a non-current asset. Time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 2 is D. It takes a substantial period of time to get the asset ready for its intended sale. This is the only condition for an asset to be so qualified for borrowing costs to be capitalized. D is the answer to question number 2. Question number 3. Borrowing costs on qualifying assets which are measured at fair value are dash. A, not capitalized. B, capitalized. C, are deducted from the fair value. D, are added to the fair value. E, deferred into the future. Time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 3 is A, not capitalized. An entity is not to capitalize the borrowing cost directly attributable to a qualifying asset measured at fair value. A is the answer to question number 3. Question number 4. Borrowing costs may include the following except dash. A, interest expense calculated using the effective interest rates. B, processing fee. C, management fee. D, weighted average cost of capital. E, finance charges in respect of finance lease. Time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 4 is D, weighted average cost of capital. Weighted average cost of capital includes cost of equity, which in itself is not a borrowing cost. Borrowing costs are interest and other costs that an entity incurs in connection with the borrowing of funds, whereas equity is not a borrowed fund. D is the answer to question number 4. Question number 5. Borrowing costs are dash: A, expensed; B, capitalized; C, deferred; D, B or C; E, A or B. Time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 5 is E, A or B. Where certain conditions are met, borrowing costs are capitalized. Where the conditions are not met, borrowing costs are expensed. E is the answer to question number 5. Question number 6. For a non-manufacturing company, which of the following is not a qualifying asset? A, power generation facilities; B, intangible assets; C, inventories; D, investment properties; E, bearer plants. Time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 6 is C, inventories. For a non-manufacturing company, its inventories must be bought in inventories and are not qualifying assets. C is the answer to question number 6. Question number 7. Which of the following holds for an item with capitalized borrowing cost? A, retained earnings increases by some of the amount of the capitalization. B, retained earnings reduces by some of the amount of the capitalization. C, income increases by some amount of the capitalization. D, assets reduce by some amount of the capitalization. E, assets increase by some amount of the capitalization. Time counts. Ten seconds gone. Twenty seconds done. Time up. The answer to question number 7 is E, assets increase by some amount of the capitalization. Capitalization of borrowing costs asks the borrowing cost to be part of the cost of the assets. E is the answer to question number 7. Question number 8. The weighted average of the borrowing cost applicable to the borrowings of the entity that are outstanding during the period, other than borrowings made specifically for the purpose of obtaining a qualifying asset, is called dash. A, weighted average cost of capital rate. B, borrowing cost rate. C, capitalization rate. D, borrowing rate. E, outstanding cost rate. Time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 8 is C, capitalization rate. The wording of the question is the meaning of capitalization rate as stated in the standard. C is the answer to question number 8. Question number 9. Borrowing costs are not attributable to which of the following on qualifying assets? A, acquisition. B, construction. C, production. D, construction and acquisition. E, maintenance. Time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 9 is E, maintenance. Borrowing costs are attributable to all the activities in the options towards qualifying assets except maintenance. E is the answer to question number 9. Question number 10. Cessation of capitalization of borrowing costs will mean that borrowing costs are dash. A, deferred. B, expensed. C, capitalized. D, stopped. E, stored. Time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 10 is B, expensed. An entity ceases capitalization of borrowing costs when substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. B is the answer to question number 10. That is all for this set. Thank you for joining us for the set 1 of IAS 23, borrowing cost. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaborations in this area, please call or WhatsApp +234 903 077 0109. Bye for now.